Hey everyone, and welcome to The Explainer. Today, we're diving into a company that's sitting smack in the middle of a massive macroeconomic shift. We're looking at Argan Inc. and their phenomenal first quarter results for fiscal 2027. If you want to know how the literal nuts and bolts of our rapidly electrifying world are actually being put together, well, you are in exactly the right place. Let's kick things off with a pretty staggering number, 78%. Based on the industry data we're looking at today, global electricity demand is projected to skyrocket by a massive 78% by the year 2050. I mean, think about that. That is an absolute paradigm shift in how much power our civilization is going to need. Okay, let's dive into this. Here's our roadmap. We'll start with the electrification of everything, look at the financial proof of Argon's record-breaking first quarter, see how their backlog is driving the electric economy, inspect their rock-solid foundation, and finally look at how all of this is rewarding their shareholders.
Part 1. The electrification of everything, meeting an unprecedented demand.
The sheer scale of this macro problem is honestly fascinating. Thanks heavily to the explosion in AI, U.S. data center power demand is projected to nearly triple, hitting 134.4 gigawatts by 2030. Imagine the infrastructure needed for that. We're talking about massive, power-hungry hubs running around the clock. And when you combine that with the onshoring of domestic manufacturing and the massive shift toward EVs, the demand is just astronomical. But here is the catch. This boom is colliding head-on with an aging, decades-old power grid. A staggering 104 gigawatts of aging power plants are expected to retire by 2030. So we're facing a critical bottleneck where urgent infrastructure upgrades are literally the only way to keep the lights on and the data centers humming. Now, to really grasp this, we need to bring those abstract numbers down to earth. Solving this power crisis isn't just about writing code, right? It's about pouring concrete, erecting steel, and building highly complex, large-scale energy facilities. It takes immense physical infrastructure to meet this growing demand for reliable electricity. And you know what? That is exactly what Argan does. Moving on to part 2, record-breaking first quarter, the financial proof. $291 million. That is Argan's record-breaking revenue for the first quarter of fiscal 2027. It's a crystal clear indicator that their specific capabilities are in incredibly high demand right now. But honestly, the sheer velocity of this growth is what's truly staggering. That $291 million represents a massive 50% jump compared to the exact same quarter last year. And get this, it wasn't just a fluke in one area. All three of their operating segments achieved significant revenue growth. Top-line growth is great, sure, but Argan is actually bringing it down to the bottom line with exceptional, disciplined execution. Gross margin hit a really healthy 21%, which is $61.1 million. Their diluted earnings per share, that shot up a full $1.64 year over year, landing at $3.24. And when you factor in an adjusted EBITDA of over $56 million and a net income sitting at $46.1 million, well, this proves they aren't just taking on revenue for the sake of it. They're executing complex projects with incredible financial discipline, thanks to a smart shift in project mix and actually finishing projects ahead of schedule.
Part 3. Driving the electric economy, the $2.8 billion backlog.
And this brilliantly illustrates how they are doing it. Argan is tackling the electrification challenge with a massive $2.8 billion project backlog. Breaking that down, 79% of that backlog is in natural gas, 13% is in renewables, and 8% is in industrial projects. As Argan's leadership notes in the source material, gas-fired plants currently remain the ideal solution for delivering the highly reliable, uninterrupted baseload power that data centers and manufacturing facilities absolutely require right now. They're practically building the bridge to the future electric economy. Now, it's vital to remember that this $2.8 billion backlog isn't just a bunch of theoretical blueprints. It's fully committed and actively being built right now by specialized engineering, procurement, and construction teams. Firms with a proven track record, like Argan's Gemma Power Systems and Atlantic Projects Company, are the ones successfully executing these massive, multi-year projects safely and on time. Let's move to and see how this builds a truly diversified portfolio. They're constructing massive baseload power, like the 1350-megawatt CPV Basin Ranch and the 1200-megawatt Sandout Lakes combined cycle plants down in Texas. But they're also building solar projects in Illinois and biofuel plants in Ireland. They even snagged a specific $125 million contract just to fabricate thermal expansion and energy storage tanks explicitly for U.S. data centers. It's a really comprehensive, multifaceted approach to energy infrastructure.
Part 4. A rock-solid foundation, the balance sheet.
Okay, this is perhaps the most impressive part of the whole story. Argan's balance sheet has absolutely zero debt. Holding nearly $1 billion in cash and investments gives them massive bonding capacity. That's essentially the financial backing and insurance guarantees you need to safely take on billion-dollar mega projects. In the world of heavy construction, having zero debt provides a highly flexible, super low-risk business model. It allows them to be incredibly disciplined in choosing the exact right projects, in the right locations, with the exact right partners.
Finally, part 5, rewarding the shareholders, returning the value. Now, what's really interesting about this slide is Argan's aggressive, two-pronged approach to returning value. First, through a growing dividend strategy. They offer a quarterly dividend of 50 cents, making the annual rate $2 a share. They've had 3 straight years of dividend increases, which cumulatively represents a 100% jump compared to June 2023. Second, they're opportunistically buying back stock. They've returned $116.7 million to shareholders since November 2021 through share repurchases, and they actually just bumped that program up from $150 million to $200 million, extending it all the way through January 2030. They are quite literally paying their investors to wait while that massive backlog converts to revenue. Which brings us to our final thought. We are witnessing an unprecedented macroeconomic shift. The electrification of everything, driven by AI data centers, EVs, and domestic manufacturing, demands a massive global infrastructure overhaul. So the question you should take away from this explainer is this. As the world scrambles to find reliable, uninterrupted power, which companies actually possess the financial flexibility, the zero-debt foundation, and the proven engineering expertise to put the steel on the ground and build it? Well, Argan's first quarter results certainly make a compelling case that they're one of the few. Thank you so much for joining me for this explainer. Keep learning, and I'll see you next time.